Welcome to the channel, everyone. In today's video, we'll be learning how to trade options on the Robinhood mobile app. We're going to be going through several different examples to make sure you guys really get the hang of it. Specifically going through the steps of buying and selling calls and puts, vertical spreads, and iron condors. Now, jumping right into it, the very first thing we need to do is head over to the stock profile page by navigating to the search box at the bottom of your screen. Once we get this page pulled up, we simply need to find the search box at the top of the page and then type in the symbol that we want to go to. In this first example, let's go ahead and type in coin for Coinbase. We're then going to find it in the list there and then go ahead and click on it. From there, once we actually have the stock profile page pulled up, we can actually see what Coinbase last traded for and how much it's up or down for the day. We could also see a little chart down below as well as some basic Coinbase information if we scroll down the page. Now, moving on from that, in order to actually trade the options, we do need to come down to the trade page in the lower right-hand corner and go ahead and click on that. From there, we then need to find and click on the trade options button. And as soon as we click on that, it will open up a strategy page. Now, this can actually be incredibly useful for those of you still learning how to trade options in here, because you can kind of select where you think the stock is headed next, and then it'll give you a list of strategies that would make sense depending on that. So in this case, right now I've got the up arrow selected saying I think Coinbase is going up from here. Well, looking right down below that, you can then see a list of strategies that would make sense if Coinbase was going up. Right there it says we could buy a call option, we could sell a covered put, we could buy a call spread, or we could sell a put spread. Those would all make sense if we thought coin was going up. If we were to instead click on the down arrow, it now gives us a list of strategies if we thought Coinbase was going down from here. Right there it says we could buy a put, we could sell a covered call, we could buy a put spread, or we could sell a call spread. Just to the right of that is if you weren't sure which direction it was going to go, but you thought it was going to have a big move in one direction or the other. Right there it says we could put on a straddle or a strangle. Now finally, the last one is if you thought the stock was just going to go sideways, basically do nothing. Right down below it says we could put on an iron condor, an iron butterfly, or a calendar spread. Another cool thing about this page is if we were to click on one of those strategies, like if we clicked on Iron Condor here, it'll actually give you a description of what an Iron Condor actually is and how it makes money. Now, once you actually decide what you want to do, we can always hit this back arrow up here in the upper left-hand corner. And then from there, we can actually see all of the options expirations at the very top of your screen. So right up there at the top, we can see the March 18th, March 25th, April 1st, April 8th, and if I scroll through it, you can see there are quite a few expirations available for the Coinbase options. In this case, it goes all the way out to January 19th of 2024. That's 2 years from now. Now, for this first example, we just want to buy a single call option, and we're not going to go that far out in time. We're going to scroll back, and I'm going to find the April monthlies, which is April of 2022. So finding in my list here, I'm going to go ahead and click on that. And now remember, I just want to buy a call option because I think Coinbase is going up from here. Now looking right below the options expirations, you can see a couple little toggles right there. First off, one says buy and sell, and the other one says call and put. This is where you guys can specify what we're actually doing. In this case, we are going to buy a call option, so I've got the toggle selected that I want to use. But if you guys needed to change these, if you wanted to sell a call instead of buy a call, you would simply flip this from buy to sell. Or if you instead wanted to trade the puts instead of the calls, you would simply click the put button at the very top there. Now, like I said, in my case, we are going to be buying the call option. So I'm going to flip this back over to buy, and I'm going to select the call option right there. Now, once we've got those toggles flipped over to the right actions, we're buying the calls, we can actually see all of the strike prices available down below. So all of the strikes are on the left-hand side. You can see there the 185 calls, the 180 calls, the 175s, 170s, and if I scroll through this list, there will be a lot more available than just those. But we can see all the strikes on the left-hand side. Looking on the right-hand side, we can actually see the current price for that option contract. So if we were looking at the 190 calls, we can see they're currently going for $8.15, and right now they're down 5.23% today. Now, another helpful little feature is if we look right below the strike price, it'll actually tell us the break even if we hold these contracts all the way till expiration. So right now, if we were to buy that 190 call and we were to spend $8.15, the break even on that trade is $198.15. So if we buy that call option today, we would need Coinbase to be at $198.15 by April of 2022 just to break even. Now you can look just to the right of that break even price, that would be a 15.1% move in Coinbase stock. So it's got to have a pretty big move in the next 3 weeks or so for me to break even. Now, of course, you don't actually have to hold these contracts until expiration. You could buy and sell it 5 seconds later if you wanted to. But if you hold it till expiration, that is the break even, $198.20 as of right now. Now for this first example, let's say we wanted to buy an option right at the money. So we wanted to buy the 175 calls and they're currently going for $14.10. If we actually wanted to buy those, we would simply click on the current price, $14.10. As soon as we click on that, we can see the option gets populated down below. It says we're about to buy the 175 call for April of 2022. And if we wanted to continue, we would simply hit that big green continue button down at the very bottom of the screen. As soon as we click on that, it brings up the order ticket to actually buy these options. And the first question it's asking is how many contracts do you actually want to buy? Keeping in mind that each contract represents 100 shares of the underlying stock, let's say we wanted to buy 2 contracts. So I'm going to type in 2 right there. Right below that, we can also specify the price that we wanted to pay for these contracts. Now, as of right now, I can see the current asking price, which is the best price I could fill out right now, is $14.60. The mid price, which is auto-filled in there, is going to be the midpoint between the bid and the ask. And as of right now, that's $14.30. Now, you're never guaranteed to get filled at the midpoint, but that's always what I'm going to try and fill at, is at the mid between those 2 prices. So I'm actually going to leave that as $14.30. And remember, I'm not guaranteed to fill here. I might have to raise the price up a little bit to actually guarantee a fill. But right there, it's saying I'm going to buy 2 contracts for $14.30 each, and it's going to cost me a total of $2,860. Now, looking down a little bit further in this order ticket, you can also see the max profit on this trade is unlimited. And that's because theoretically, there's no limit to where Coinbase stock could go. Could go to 300 a share, 500 a share, 1,000, who knows? Now, looking just to the right of the max profit box, we can also see the break even on this trade is $189.30, and our max loss on this trade is $2,860, which is, remember, how much we're paying for this trade. So the most we can lose is what we paid for it. Now, if I actually wanted to continue, I actually wanted to place this trade, I would simply hit the review button down below, and then from there, it would give you an order confirmation screen, and you would just have to hit submit. Now, in my case, I don't have enough money for this trade. I think I only got like $10 in this account. So I'm going to go ahead and dismiss this and back out of this trade. But that's how you would do it. Now, as for the next one, let's instead say that you wanted to buy a put option. And let's actually use a completely different stock. So I'm going to hit the clear button in the upper right-hand corner to get out of this. I'm then going to hit the X button in the upper left-hand corner. And we're instead going to search for, let's say, Apple for this next one, AAPL, and go ahead and click on it in the list here. At the moment, we can see that Apple is currently trading for $158.15, and let's say we thought it was going to go down from here. So what we're going to do is hit the trade button in the lower right-hand corner. From there, we could then select trade options. If you then wanted to double check yourself, you could then select the down arrow, and then right there we could see that it would in fact make sense to buy a put if we did think Apple was going down. So now we've confirmed that the strategy actually does make sense considering what we think is going to happen next. We're then going to select the expiration up here at the very top. Looking up there, let's say I wanted to go to the April 8th expiration. So I'm going to go ahead and click on April 8th there. Up at the top, we then need to select the correct toggles. Keep in mind that I wanted to buy a put option. So I've got the buy toggle selected, but this time I need to select over to the put side. Now that I've got the put selected, we can see all of these strikes on the left-hand side. And in this case, let's say I wanted to buy the 160 puts. So right there, I can see that the 160 put is currently trading for $5.45, and the break even on this trade is going to be $154.55. So if I were to buy these Apple puts right now, I would need Apple to go down to at least $154.55 by April 8th just to break even. Now keep in mind, that's only the break even on expiration on April 8th. If Apple were to go down today, and let's say it went down to 156, I'm probably going to be up a pretty decent amount on this option contract, even if it's not to my break-even price. Now, moving on from that, let's actually say I did want to put on this trade. I'm going to go ahead and click on the current price there, $5.38. As soon as I click on that, you can then see the option contract gets highlighted, and then down below, you've got the option contract in that little box. It says we're about to buy the 160 put for the 4/8 expiration. If we wanted to move forward, we would simply hit that button, the continue button down at the very bottom. From there, it would then give us the little order ticket, just confirming that we in fact do want to buy the Apple 160 put for the April 8th expiration. We then need to select how many contracts we wanted to buy. In this case, let's say we actually wanted to buy 10 of them. So I'm going to type in 10 right there. Then just like before, the next thing we need to specify is what price we wanted to pay for these contracts. Looking down below, we can see the current bid-ask spread is 525 by 530. So if we wanted to buy it right now, if we put it in at 530, we should fill instantly. Now, of course, you could try and get a better price than that if you wanted to wait until it comes down a little bit. But if we wanted to fill right now, we're going to have to put it in at the current asking price. So let's say we want to do that. We're going to type in $5.35 right there. Then looking right below that, we can see the max cost on this trade would be $5,350. And remember, that's because we're doing 10 contracts. So each one of these contracts is going to cost us $535 times 10. That comes out to the $5,350. Now, right below that, we can also see the max profit on this trade would be $154,650. And that would only be if Apple went to $0 a share, went completely out of business. That's how much we could theoretically make on this trade. Just to the right of that, we can then see the break even again, where we need Apple to go by April 8th, 154.65. And then finally, on the far right-hand side, the max loss. The total amount we could lose is what we paid for it. Just like before, if you actually wanted to place this trade, you would simply hit the review button and then confirm and send it. But I think you guys get the idea. Robinhood makes this process incredibly simple. I don't necessarily think it's the best platform out there to trade options, but it does make it very simple. Now, in our case, let's go ahead and back out of this, hitting the X button here, and we're going to exit out of it again in the upper left-hand corner. The next thing I wanted to go over is how we could sell the options. So basically sell the calls or sell the puts. Now, in order to do that, we're going to come down to the search box and we're going to find a different stock ticker. This time, let's type in Microsoft, MSFT, and then go ahead and click on in the list here. From this stock profile page, we're going to hit the trade button just like before and then select trade options. In this example, let's actually say you had 100 shares of Microsoft and you wanted to sell a covered call against it. Now, in order to do that, we're going to first find the expiration. So up here, let's say you wanted to do the April 1st expiration. We'll go ahead and click on that. From there, we're then going to come up to the top, and this time, because we are selling a covered call, we do need to flip the button over to sell. Now that we've got the correct tab selected, we've got the sell and call tabs selected, we're going to scroll up a little bit, and let's say we wanted to sell the 310 call. Now keep in mind, a covered call simply means that I am willing to sell those 100 shares that I have at this price. So in this example, if we were looking at the 310 call, we can see that somebody is currently willing to pay us 97 cents for this contract. So if we actually did want to sell this covered call, we would simply click on the current price there, 97 cents. From there, we would then look down at the very bottom and hit the continue button, just like before. Right there, we would then specify how many contracts we wanted to sell. In this case, we only have 100 shares of Microsoft stock, so we're only going to sell one contract. Right below that, we can then specify the price or the amount that we want to receive for selling this contract. Now, because we're selling, we're going to receive this amount, and that's why it says there's a credit that's being received. Now, at the moment, the current bid ask is 89 cents by $1.05. Now, since we're selling, the best price right now available is 89 cents, where we know we could fill. Of course, we could always try and get a better price than that, but there's no guarantee that we're going to fill. At the moment, you can see that the current mid price is 97 cents, and let's say that's what we wanted to try and get, 97. So there, when I type it in, you can then see the credit that we'll be receiving is going to be $97. Down below, we could then see the max profit on this trade is going to be 97 bucks, which remember is the credit that we're receiving. We can kind of disregard the break even in this example since we're doing a covered call, and you can also disregard the max loss. That would only apply if you were doing a naked call. Now, if you actually wanted to move forward and place this covered call trade, you would simply hit review and then send the trade out there. Now, backing out of this, let's go ahead and hit the X button here and then clear this ticket out of here. Let's instead say that you wanted to sell a cash secured put. Now, let's just go ahead and leave it on the Microsoft options. We're going to leave the sell toggle selected, but this time we're going to flip it over to the put options. And looking through this option chain, let's say you were comfortable buying 100 shares of Microsoft at, I don't know, let's say 280. And remember, that's what a cash secured put is. You're saying, I am actually willing to buy these shares at this price between now and expiration. You can almost think of a cash secured put as a limit order that you're getting paid to put on. Now, right there, looking at that 280 put, you can see that somebody currently is willing to pay you $3.30 for that trade. So right now, they're willing to give you 330 bucks for the right to sell you their 100 shares of Microsoft at 280. Now, if you were comfortable with that and you thought that credit was decent and you thought the probability of actually profiting on this trade was pretty good, let's actually say we wanted to sell that thing. So we're going to go ahead and click on the price there, $3.33. From there, looking down at the very bottom of your screen, you can go ahead and click on that continue button once again, and then just like before, specify how many contracts you wanted to sell, what price you wanted to sell it for, and then if you're happy with everything, just hit the review and send button. But hopefully that helps with the sell side of things. And before we move on to spreads, the last thing I wanted to show you guys is if we go ahead and clear this out of here, you can actually click on these option contracts to see a little bit more information about them. So let's say we were still looking at that 280 put there, and at the moment it's got a 76.64% probability profit. If we wanted a little bit more info about that option, we could go ahead and click on it. From there, we could then see the current price, the last traded price, the current IV on it, 32.7%, and we could also see the Greeks down at the very bottom. So right there, you can see the delta, gamma, theta, vega, and rho. Now, until you guys are comfortable trading options, you're probably not going to use those. But I would say if you're learning options, probably the most important thing you guys want to learn about. Now, another cool feature that was actually just added to Robinhood was the ability to add this specific option contract to a watch list, and that's what that button is down at the very bottom. So if you guys wanted to keep track of this specific option contract, we could always hit add to watch list. And now if we went back to our account overview page, let's back out of this, go to the first tab at the bottom and scroll down a little bit. You can see in my options watch list right there is the Microsoft 280 put. But moving on from that, let's next go over how we can actually put on a spread in this app. Now it's the same exact process as before. We do need to come down to the search box at the very bottom. From there, I'm going to back out of Microsoft and I'm instead going to look at, let's say, Square. So SQ, find it in the list here and go ahead and click on it. From there, I can see that Square is having a good day here. Looks like it's trading for $123.59, up about $7.50. From here, we're going to go ahead and select the Trade tab, and then I'm going to select Trade Options. Now, in this example, let's actually say that I am bullish on Square. I think it's going to go up from here. And if I look down a little bit, I can see that two of the spreads there are to buy a call spread or to sell a put spread. Those are two strategies that would make sense if Square was going up. Now for this first one, I'm going to put on a call debit spread. So I'm going to be buying a call spread. Looking back up towards the top, we're going to pick the April 1st expiration. And then to do this, we need to buy a call and sell a call simultaneously. Now looking here, let's say I was looking at the 125 by 135 call spread. So basically buying the 125 and selling the 135. Now in order to do that, we do need to make sure we've got the buy call option selected because the first thing we're going to do is buy the 125 call. So since I do have buy and call selected, I'm going to go ahead and click on the current price for that 125 call, $7.33. From there, I do add the 125 call down below, and the next thing I need to do is flip the toggle up at the very top from buy to sell, because now we need to sell the 135 call. Now that I've got the sell toggle selected and I still have the call option selected, I'm going to come up to the 135 call and click on the current price, $3.58. From there, if I now look at the very bottom, it says I've got two options selected. I'm buying the 125 while simultaneously selling the 135. And if I click on the continue button, it'll actually tell me that right down below. So right there, it's actually telling me I'm about to buy one of the 125s, sell one of the 135s, and I'm doing it for a total cost of $3.80. Now it's also pretty helpful in the fact that it does tell us our max profit on this trade would be $620, which is the width of the spread minus what we paid for it, as well as telling us the break even on expiration where we need Square to go by April 1st is 128.78, and then our max loss is the amount that we paid for this spread. Now, if you were to hit the review button at the very bottom, it'll then, just like before, ask you how many contracts you want to buy, what price you want to pay for it, and then tell you the total cost, the max profit, max loss, all that good information. But if we wanted to go over that one more time, let's go ahead and exit out of this, and let's actually flip over to, I don't know, we'll do Microsoft again, MSFT, we'll go back to that. And just like before, I'm going to come down to the trade button, trade options, and just like before, I actually think the stock is going to go up, but let's actually put on the put credit spread instead. We're going to sell a vertical put spread. Now in this example, we're going to go out a little bit further. We're going to go out to April 8th. And at the moment, I actually have the toggle selected that I want to use. I've got sell put. And in this case, I think Microsoft is going to stay above, let's say 270. So looking down there, I can see the 270 put is currently going for 270. And if I were to click on that, I can add the option contract down below. Now, in order to turn this into a vertical put spread, instead of just selling a put, I do need to buy a hedge. So I'm going to flip this over to the buy toggle. And then I'm going to look down a little bit further and we're going to buy 10 points further out of the money. We're going to buy the 260 put. So right there, I can see the 260 put is going for $1.53. I'm going to go ahead and click on that. From there, down below, it actually says I now have two options selected. And if I go ahead and click on that, it'll tell me I'm about to put on a put credit spread or sell a put spread. Right there, it says I'm about to sell the 270 put and I'm going to do so for a credit of $2.66. I'm then simultaneously buying a 260 put for $1.53, which is my hedge on this trade. Now right there, it says the total credit I'm going to receive, which is my max profit, is $112. It also says if things were to go against me, my break even is going to be 268.89. So as long as Microsoft stays above that, I'll at least make some money on this trade. Now, if things go completely against me, and that would be if Microsoft went below 260, I could lose $887 on this trade, my max loss. Now, moving on from this, if you were to hit the review button, you would then specify how many of these spreads you wanted to put on, what price you wanted to receive for them, and then again, you get the information down at the bottom. But creating the vertical is not too crazy, just need to buy the option you want to buy, sell the option you want to sell, and then move forward. Now, the last one we're going to talk about is an iron condor, and this is exactly the same process, but now we've got to do it with 4 legs instead of 2. So backing out of this, let's actually go to a different stock ticker. For this one, we'll go ahead and throw in Facebook, and we're going to go ahead and click on it at the very top here. Coming back down to the trade page, going to trade options. In this case, we're saying that we don't think Facebook is going to do much of anything between now and expiration. So we're going to click on the little sideways squiggly button on the far right-hand side. Right there, it says if you think the stock is going to stay exactly the same price or roughly the same price, it says an iron condor could make sense for this trade. So if we were going to do that, let's say we wanted to go out a little bit further. We wanted to do the April 22 option expiration. So that's about a month from now. From there, in order to do this, we actually need to sell a call, sell a put, buy a call, buy a put. So 4 different trades. Now we're going to go ahead and start with the call side first, and the strike price we're going to select is based on where we think Facebook could go. So let's say we thought Facebook might be able to go all the way up to the 220 strike. So right there we can see the 220 call option is currently trading for $4.05, and since we do have the sell call toggle selected, we're going to go ahead and click on that price there, saying we're going to be selling the 220 call. From there, we then need to select the buy toggle, because now we're going to be buying the further out of the money call option. And in this case, let's say we're doing a 10-point wide iron condor. So we're going to go 10 points further out of the money, which would be the 230 call. Right there, we can see it's currently going for $2.05. And since we went to buy that one, we're going to go ahead and click on that. From there, down at the bottom, it now says we have 2 options selected. So we're about halfway through the process. The next thing we need to do is actually flip this over to the put side instead. And we're going to go back to the sell toggle. Now for this one, we do need to pick the lower band, the lowest price that we think Facebook will go between now and expiration. And if we scroll down a little bit, we're looking here and we see the 185 puts. Let's go ahead and click on that one because we want to sell that one. From there, we then need to flip it back over to buy. And remember, we're going to buy 10 points further out of the money. In this case, that would be the 175 put. So now that I see the price there is $2.13, I'm going to go ahead and click on that. And then down below, it says we now have 4 options selected. If I go ahead and click on the continue button, it now says we're about to put on an iron condor. You can see there it says we're buying one of the 230 calls, we're selling one of the 220 calls, selling one of the 185 puts, and buying one of the 175 puts. Basically, for this trade to work out, we want Facebook to stay between 220 and 185. As long as it does that, we'll make money on this trade. Right there, it says the total credit that we're receiving is going to be $369. So that's the most amount of money we could ever make on this trade. And then just to the right of that, it also tells us our break even is 181.31 to the downside and 223.69 to the upside. If you actually wanted to move forward with this, we would simply hit the review button and then put in how many iron condors we wanted to sell, what price we wanted to sell them for, and then hit review and send down below. But I know that was a ton of information, but this really should get you off to a good start and get you guys comfortable trading options within Robinhood. If you guys have any additional questions for me, feel free to leave them down below, especially if you want me to go more in depth on any of these strategies that we did talk about. Also, if you guys are looking for other tutorials, be sure to check out my other videos on the channel. But we'll go ahead and wrap it up here. I hope you guys all have an amazing rest of your week, and I'll catch you on the next video.